Hi, I'm Guy from Statrys. Welcome to part 2 of our series on the factors you should evaluate when choosing between Singapore and Hong Kong for setting up your company. Today we'll cover 2 important factors: tax policies and financial infrastructure. Let's start with everyone's favorite topic, taxes. Tax policy is crucial when deciding between incorporating in Hong Kong or Singapore. Understanding the differences can help you make an informed decision. The first thing to know, both Hong Kong and Singapore operate territorial tax systems. This means companies generally pay tax only on profits sourced within their respective jurisdictions. Let's start with Singapore. Singapore has a 17% flat tax rate on all profits, but new companies get significant startup benefits. Here's how it works. 75% exemption on the first 100,000 Singapore dollars of profit, 50% exemption on the next 100,000 SGD. This applies for your first 3 years. This effectively lowers your tax rate to about 4.25% on the first 100,000 SGD, then 8.5% on the next 100,000 SGD. Any profits above 200,000 is taxed at the full 17% rate. Now here's something crucial. Tax residency matters. A company is considered tax resident if its control and management happen in Singapore. That means where key strategic decisions are made. So if your company is managed and controlled from outside Singapore, it's generally considered non-resident for tax purposes. Non-resident companies pay tax only on Singapore-sourced income. But here's the thing. Resident companies pay taxes on their profit, but enjoy certain tax benefits not available to non-resident companies. This includes the startup tax exemption that we just mentioned. You also get access to Singapore's extensive network of dual tax treaties and tax exemptions on a certain foreign-sourced income. Now let's look at Hong Kong. Hong Kong source profit is taxed at 8.25% on the first 2 million Hong Kong dollars. That's about 255,000 USD, and 16.5% on profits above that threshold. However, if your income is foreign sourced, you may qualify for 0% corporate tax. Make sure to keep the following in mind. To qualify for offshore tax exemption, you must operate entirely outside of Hong Kong's borders. This means your business activities, clients, suppliers, and management operations are all located outside of Hong Kong. Even if your income is foreign sourced, you're still required to file annual corporate tax returns. You must also submit a formal offshore claim to the Inland Revenue Department, or the IRD, to obtain a tax exemption. Successful offshore claims depends on clear evidence. This includes contracts, invoices, or board resolution showing that business decisions, operations, and service delivery all happen outside Hong Kong. The IRD is strict about this and routinely audits claims. It's not a big issue if everything is set up correctly. But here's the key point. If you carry out business activities while physically in Hong Kong, like signing contracts or meeting clients, the IRD may classify your profits as Hong Kong sourced and fully taxable. If you're unsure whether your company could qualify for offshore status, we've added a quick eligibility quiz in the description below. Something else to note about Hong Kong. There's no GST, no VAT, no capital gains tax, and no tariffs on general imports. In summary, both Hong Kong and Singapore offer a highly competitive tax environment. Singapore offers structured tax incentives and international tax coordination, which can benefit startups or R&D focused businesses in their early stages. Hong Kong provides more straightforward tax treatment and lower rates for companies with offshore income. Now let's explore the financial infrastructure of both Hong Kong and Singapore. Whichever jurisdiction you choose, you will need to understand your business account options. Let's start with Singapore. Singapore ranks 4th globally as a financial center. It has over 100 institutions and a strong focus on digitalization, including 5 licensed digital banks. Multi-currency accounts are widely available. Some offer partial online setup. However, most non-residents still need to complete part of the process in person. Initial deposit requirements may also be higher. Major payment processors like Stripe and PayPal easily integrate with Singapore companies. Singapore offers smoother processes for regional growth across ASEAN, particularly if you need institutional financing tools. Now let's look at Hong Kong. Hong Kong ranks third globally as a financial center. It has over 100 financial institutions, including 8 digital-only banks. Business accounts often support HKD, RMB, and USD. You get better access to Chinese yuan and direct connections to Chinese financial systems. This is essential if you do business with mainland China. But here's the challenge. Most traditional providers still require an in-person visit to open an account. The reality is that big financial institutions like HSBC don't want to deal with small businesses anymore. Don't expect to walk into HSBC and walk out with an account. You might wait weeks for an account opening decision and still get rejected without clear explanation. Here's the thing. For most foreign entrepreneurs who run their businesses remotely and don't plan to live in Singapore or Hong Kong, you should consider a modern fintech alternative like Statrys. As a licensed fintech, we provide business accounts that work for international companies in both jurisdictions. Instead of waiting weeks or months for a traditional institution, you're looking at 3 to 5 days from application to approval. Everything is done online, so you can skip the trip to Hong Kong or Singapore. What you get? Accounts in 11 major currencies in one account. Same account details for all currencies, international payments to over 100 countries, an online platform that's simple to use, no minimum balance requirements. Here's the bottom line. Singapore offers smoother processes for regional growth across ASEAN. Hong Kong is a strong choice for businesses with cross-border operations in Greater China. Modern fintech solutions like Statrys solve the traditional bank challenges in both jurisdictions. Now, it's time to look ahead to the future of these two dynamic business environments. Whether you're planning to scale, innovate, or tap into new markets, understanding where Hong Kong and Singapore are headed will help you make the best choice for your business. Both Hong Kong and Singapore continue to evolve, but different priorities shape their trajectories. Singapore is leaning into its reputation as a global innovation hub. Continued investments in technology, sustainability, and digital infrastructure supports its long-term goal, attracting high-growth startups and multinational headquarters. Its policy stability and strong intellectual property protection make it a strategic base for businesses targeting ASEAN and global markets. Hong Kong is expected to strengthen its role as a key connector between mainland China and international markets. With increasing integration into the Greater Bay Area and strong government support for fintech, logistics, and professional services, it remains a critical entry point to the Chinese market. Ongoing efforts to modernize regulation and attract foreign investments show promise. This is particularly true for businesses focused on trade and capital markets. To put it simply, Singapore is focused on strengthening its global competitiveness through innovation and regional leadership. Hong Kong is well positioned for China-facing growth. Both remain compelling choices depending on where your business is headed. So there you have it. We've covered the key factors for choosing between Hong Kong and Singapore. Here's the bottom line. Both Hong Kong and Singapore are world-class business jurisdictions. The right decision depends on which factors are most important to your specific business strategy. Is that location or market access or ease of setting up a company, tax efficiencies, or business account access? At Statrys, we offer incorporation packages for both Hong Kong and Singapore. Our full suite of services includes company registration, business account opening, ongoing compliance support, and dedicated account management. Ready to take action? Visit statrys.com and click Get Started to begin your incorporation process, or contact us directly at support@statrys.com. You can also reach us through the live chat, on our website or WhatsApp. Thanks for watching this series.